a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about deep value ETFs. Now we know that value stocks are outperforming growth stocks this year by the largest margin in 2 decades. That is according to the Wall Street Journal analysis, and it is because investors are expecting that the economy will rebound strongly later this year thanks to accelerating rollout of vaccines and a very large fiscal stimulus. And value stocks are more sensitive to economic growth than growth stocks, and that is why investors have poured more than $18 billion into value ETFs this year. That is according to Bloomberg data. And these value ETFs, they hold stocks which look attractively priced on the basis of price to earnings, price to book value, and price to sales ratios. And also growth stocks had benefited last year. They had benefited a lot from stay-at-home and work-from-home trends. And some of those growth stocks, they look a little bit expensive. So that is why many investors are rotating out of growth into value stocks. So the Russell 1000 Value Index is up over 31% over the past 6 months. That is since when this optimism about vaccines started. And that is basically double the returns of Russell 1000 growth index. But we have seen this story several times in the past 10 years. Growth stocks have significantly outperformed value stocks over the past decade, over the entire recent bull market. And in fact, the Russell 1000 growth index is up over 380% over the past 10 years. And that is double the return of the Russell 1000 value index. So several times in the past 10 years, we saw this rotation out of growth into value, and that did not last long. So it remains to be seen whether this can last this time. And that is why I normally recommend to investors to have exposure to both growth and value in the portfolios. If your portfolio is heavily weighted in growthy tech stocks, then maybe adding some value ETFs makes a lot of sense. And within value, the ETFs that focus on deepest value stocks, purest value stocks, they have done much better than plain vanilla value ETFs. So let's take a look at 3 such ETFs which have done very well this year. So the first one we are highlighting is by Invesco, and this focuses on small cap stocks. And a small cap, the combination of small cap and value has been very good this year. The ticker symbol is RZV. It's a fundamentally weighted ETF, and this holds stocks with the strongest value characteristics in the S&P Small Cap 600 Index. Has 370 million in assets and charges 35 basis points. To learn more about this ETF, you can go to the quote page on Zacks.com. And from there, the external homepage, Invesco webpage for this ETF, and you will see that what it holds. It measures stocks on the following factors: book value to price, earnings to price, and sales to price. And stocks within the S&P 600 which meet these characteristics, those are in the portfolio. Now looking at the portfolio, heavily weighted in financials and industrials which are sensitive to economic growth. And looking at the stocks, you will see these stocks not very popular: Olympic Steels, G3 Apparels, Suncoke. So many of them are not very well known stocks. Those are in the portfolio. Now, the second one I'm highlighting is by Roundhill. It is called Roundhill Acquirers Deep Value ETF, ticker symbol DEEP, DEEP. This follows an equal weighting methodology of deeply undervalued small and micro cap stocks. Has 42 million in assets and slightly expensive than the other two that we are talking about today, 80 basis points in expense ratio. Again, to learn more, you can go to the quote page on Zacks.com, and from there, the external home page, and you will look at the sector. You will see financials and industrials get the top weights in the portfolio here too, and you can look at the holdings too, and you can look at the methodology. It actually uses the acquirers deep value index, which is the measure used by activist and buyout firms to identify their targets. So, a proprietary selection methodology, and looking at the top holdings, you will again see many companies which are not very familiar because these are smallest and most undervalued stocks. The third one that I'm highlighting is by iShares. It is called iShares Focused Value Factor ETF, ticker symbol FOVL. This holds, unlike the other two, this holds large and mid-cap companies, has 38 million in assets, and cheapest of the three with 25 basis points expense ratio. Again, to learn more, you can go to the quote page on Zacks.com. Has a nice dividend yield too. And then you can go to the external home page. It tries to identify 40 large and mid-cap stocks with strongest value characteristics. And you can look at the portfolio. You will see Olin Corp, Evercore, Pinnacle, Financial Partner. These get the top holdings in the portfolio. You can learn more about the methodology from this web page. Now, on the last slide, I have the comparative performance of these three ETFs versus the S&P 500, and I have also added the most popular plain vanilla value ETF, VTV, the Vanguard value ETF there. So you will see that RZV is the best performer with 36% return. The other two have also done very well, 26 and 28% return respectively, whereas the plain vanilla value ETF VTV is up about 11%, and the S&P 500 index is up a little more than 5% year to date. Thanks for watching. In full disclosure, I hold RCV in the ETF investor portfolio that I manage. Make sure to check out Zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos so that you do not miss anything, and I'll see you next week.